Welcome everyone to the Eitel Insights podcast, episode number 2. We had a great response to episode number 1. Loved the comments that we got on there, and it was really exciting to see the fervor, maybe some positive fervor and maybe some negative fervor that we got out of the first one. We got a loaded episode for you guys today. We're going to talk about what's been happening in the headlines. Actually, what's incredible is that this is the first time that Vancouver's got so much US media attention, and of course, it's about the real estate market. We'll be talking about money laundering, we'll be talking about the college kids renting out mansions, and a lot more on top of that. So Dane, how's your week been?
It's been fantastic. As you said, the feedback from our first podcast is really over the top, in my opinion. We got a few comments publicly, but we did get quite a bit of feedback that got sent in through our website. A lot of positivity. We do have some questions from some of the listeners that we'll get to here today, and looking forward to it.
Perfect. And for the people who didn't listen to the first one, I'm your podcast host, Andy Park. We're with Dane Eitel, CEO of Eitel Insights. So we'll get right into this. The biggest thing we're seeing in the U.S. headlines about Vancouver, and again, this is atypical. It's not often that the Financial Times are talking about the Vancouver housing market, but the headlines that we're seeing on Hacker News, Financial Times, and even mainstream U.S. media is money laundering in Vancouver. I think the undertones that we've seen is that everyone sort of knows what's happening, but nobody's really unpacked this until today. So Dane, when I read a headline from Hacker News or the Financial Times and I see that Vancouver's been plagued by money laundering, give me a bit of an introduction. What's happening there? How long has this been happening? And what can we see moving forward related to this topic?
It's Vancouver is headline driven, right? When the prices are going fantastic, everyone loves Vancouver. Now that prices seem to be dipping back to previously established prices, they're vitriolic headlines. So money laundering, quite frankly, is nothing new to Greater Vancouver. It's become more impactful as prices have been going to extremes, and it's seen as a causality. Really, in our opinion, there is no causality there. Money laundering is an illegal form, illegal action, I should say. But criminals find a way to continue to thrive generation after generation, in country after country. Every major metropolis has tackled money laundering at some point in time, with varying degrees of success, but no real conquest. Nobody's ever been able to put a kibosh on money laundering. That's what we see similarly happening here in Vancouver. It's going to be in the news. There will be a couple of cases that come to prosecution, and rightfully so. But as far as it being a market mover, really, we don't see that impact. Truthfully, the real estate market of Greater Vancouver is made up of Greater Vancouver people that are looking to move up in the market. We have foreign investors and we have local investors. Money laundering isn't the major antithesis that made this market go higher in any way, shape, or form. Truthfully, I read the report, and I think that the money laundering and the betting is a little bit bigger of a deal in the horse racing rather than real estate, but it doesn't make quite the same headlines.
Right. So again, for a novice like me, I had to actually look up what money laundering was. Obviously, it's a very well-known term, but I don't think everybody knows exactly what's involved. So I'll just paint a very simple picture of how you can launder your money through the real estate market. So for example, if I'm from a different country, right, and I won't name any specific ones, but we will in a second because they were written in other articles that we didn't write. If I've made my money through nefarious means, right, maybe through arms dealing or something related to illicit drugs, and I want to be able to keep that in a bank account or in a bit more of a standard asset so I don't have to hide my money, what I might do is look overseas. I might buy a property in Vancouver, I might buy a detached house, rent it out, and the rents that I get from that all of a sudden go into a legitimate Canadian bank. The house that I bought is, it's got a proper title on it, and all of a sudden all the money that I made through my, my unscrupulous means has suddenly become clean, and the Vancouver real estate market has been an avenue for me to achieve that. So am I reasonably accurate in my assessment of what money laundering is?
Correct. Okay. It's really just a way to turn illegally accumulated funds into money that you can install into a bank with no real questions asked. Now, the one caveat I'll throw out here, I have been a realtor, I am a realtor. The nefarious activities aren't really portrayed or have been portrayed that the realtors are really a big part of this. Truthfully, I don't see it that way. There is rotten apples in every bunch. The average realtor really has nothing to do with money laundering. They would run for the hills. They would speak with their manager. But as we know, connections are connections. And in every profession, you'll find a couple of rotten apples. So what's transpired here is, you do purchase a property, and this is kind of the misnomer with some of our leadership here in BC saying that it's helped the market to the tune of 20%. I mean, it's unfathomable. The amount of money laundering is not even close to what the total numbers of sales and activity in the market is. And how we quantify the market is using averages, right? We use average sale prices, and that's how we tell how the overall market on an average basis is going to move. The money laundering thing really doesn't affect. Is it a personal situation? Is it going to be a sensationalistic headline? Absolutely. Is it going to be story-driven? Totally. But as fundamentally changing a real estate market, especially here in Greater Vancouver where we do have such a wide swath of investors, of home ownership, it can't happen. Now, where maybe it could happen is in more of a market like New York, right? Now, money laundering and criminality has been a pastime of New York, right? So to say that nothing has been done is not true in New York. They've had major arrests, but it still is prevalent. That's what Vancouverites will eventually come to realize, right? We are a major metropolis in Greater Vancouver. We're not beautiful British Columbia necessarily anymore. We're not as innocent as we were in the 90s, right? So this market has been taken very seriously as a worldwide investment. So it's no wonder that we're seeing an uptick of money laundering during the good times. But truthfully, as far as money laundering goes, I mean, this is probably more talking about money laundering than I wanted to do. It's not exactly a popular topic, but money laundering, they're not looking to stand out, right? So if they purchase a property, they're not going to sell it at the exact top dollar. They're just going to have a quiet sale, because what are they trying to do? They're trying to clean money. Yeah. They're not trying to make money with their dirty money necessarily. They're looking to clean it. So are they moving the market? No. Are they a part of the market? A small sliver segment of the market? Yes. Okay.
And, my apologies for harping on the topic. It's really interesting to me, and I love it.
It is interesting. Yeah, it is interesting.
I'm a sucker for headlines and clickbait like everyone else, right? Can I ask one last question on this topic? So is Vancouver, it seems like it's negligible, the effect of money laundering on it. Is Vancouver disproportionately affected by money laundering compared to like other Canadian cities like Calgary and Toronto, or do you think it's pretty standard across the board?
Yes. I mean, Vancouver is more susceptible to that.
Just because everyone wants to be here.
Everyone wants to be here. The demographics, the port city, and truthfully, if you probably took a look at the Toronto market, I mean, it might be foolhardy to believe that money laundering isn't happening through the Toronto Stock Exchange. And that's probably where you would find more money laundering situations in Toronto, Ontario, because they're financial town. More so than where Vancouver, we're a real estate town. So that's where we see our money laundering and in our horse racing. Right. Toronto, I mean, I'm not calling for any SEC investigations by any means, but I would be willing to wager a buck that you would see more money laundering in the Toronto Stock Exchange rather than the Toronto real estate market per se.
Right. And the SEC, they have overreaching jurisdiction, but we do have the Canadian Securities Commission here, but nobody knows what that is because it's Canada. But
nobody wants to be involved with either.
Right, yeah, exactly. Okay, so we'll go into a bit more of an analytical topic, but just to forewarn you, Dane, I have another sensationalist headline that I want to bring up later.
Can't wait.
Yeah, so we talked a lot about the housing market crash last week.
Right.
but it's we want to make it actionable for people. We want people to know what to do, because there's a lot of people who still are looking to get approved for mortgages, and banks are still giving out $1 million mortgages. So let's say, I'm a buyer, I've been looking at the market, and I listened to the podcast last week, but I just got pre-approved for $1 million mortgage. Now, I'm in a bit of a sticky situation, because for me, that's euphoric, right? I go to the bank, they say I can spend $1 million, and it seems like a wasted opportunity for me to not go and buy a house. So what are some of the things that I need to watch out for? Do you recommend that I take advantage of this mortgage, this $1 million mortgage that I might not get later?
Right. Okay. There's a lot to delve into there, so we'll do our best, and you can remind me on the other points as we go further. So, okay, to start with, if you've qualified for $1 million mortgage, congratulations. That's a great place to be in life. Now, here we go into the purchasing side of it. Let's use one of the case in points where we had a write-in comment through our website. So there was a situation where the family currently owns a townhouse, and then they were qualified for $1 million mortgage. They had their eyes set on a property that was substantially above $1 million, and they were hoping to pull the trigger. The financing didn't necessarily come in through so that they could make that one a reality. But here's the thing. So they're qualified for $1 million. In this particular situation, they have stable jobs. They're not really going to be impacted by the negative economic situation coming up here over the next couple of years. So they're kind of in a good position. So, as I said, he wants to keep the townhouse and rent that out. That's difficult in and of itself in the new age of mortgage qualifications, unless it is currently rented out. They don't really give you full value of what the potential rent could be.
I see.
So that's difficult. So that's kind of the reason why maybe the qualification came in a little bit under what they were expecting, right around the $1 million. Now, they have their eyes set on a particular school district. In that school district, we literally could buy today. Would it be the house that we were looking at a week ago? No. But we could buy. Now, as I said, his qualification standards really shouldn't change. So we go forward. We're anticipating, a further correction of, at the very least, 13% in the detached market across Greater Vancouver, with an outside chance of 23% continually to go. The total correction, top to bottom, once again, for those that didn't tune in last week, for the detached market is from 1.830 million in May of 2017 was the peak. We're anticipating at the very least it to drop to 1.4 million, which will be a 23% drop. If that watermark doesn't hold, the next psychological price test will occur at 1.225, roughly 33% down. So the average property that he was looking, or the property that he was looking at, was above that $1 million price. Now, each city inside of Greater Vancouver is unique. Inside the real estate board is unique of Greater Vancouver. Inside of the real estate board of Fraser Valley is unique. So when we quote these numbers, we're talking on a general average sale price detached property term or average sale price condo term. Coquitlam, Port Moody, New Westminster, Burnaby all have different watermarks. Some prices might actually go down 60% from the peak. Some might only go down 10%. So that's where our reports really come in invaluable to see what can you anticipate as a future drop to actually step in and take advantage of this, or has it already occurred and it's such a desirable area these prices might not go too much lower, and then we do kind of have to pull the trigger sooner rather than later in some aspects. Generally, Greater Vancouver, as we're prescribing, is going down, so you definitely have time. Going back to this particular situation, it would be best for him to wait, because that property that was roughly around $1.3 million in this particular area will be selling at $905,000 by 2021. So will it be that house? No. Someone else will, of course, come and buy it, hopefully, over the next few months at a reasonable sale price. Is it 1.3? We don't believe so. Is it below that? Yes. Is it where we can afford at $1 million? No. Is that similar type property in 2021, when the inventory is through the roof, which is a drastic change from where we're at right now? Really, where we're at right now in regards to inventory, once again, across Greater Vancouver, we're kind of at average numbers over the last 13 years. Mm-hmm. We're nowhere near horrible times, chaotic times. That is where we're trending to go. When there's more inventory, the days on market continue to lag for the listings. When days on market lag, you see reductions in prices. As we continue to see these reductions in prices, we assume we're prognosticating that this family will be able to buy a very similar type property in their desired neighborhood, in their desired school district, at the average sale price of $905,000, which he can qualify for today. However, the prices haven't dropped that far yet, and it would be unrealistic to offer that price of a 2-year drop to a gentleman today, because there are other families that have different modus operandi. They need to move, and 30 to 40% of the market is in that, which is a great thing because you do have time right now, rather than literally having an inspection the day you view the house of the open and offering multiple offers at night. I mean, you got a week, you can have 10 days, you can have 2 weeks of your subject removal to really make sure this is the property for you and your family going long term. Long-term forecast, it's fine to buy almost at any point in time in Greater Vancouver or in BC, because it still is a desirable area right across Canada.
Right. And, as they say, it's not, you should be timing the market to the extent that you can, and Eitel Insights can facilitate that, but just as important is time in the market.
Correct.
Right?
Correct. And it's accumulation, right? As you say, timing the market, there's a lot of different ways to time the market. One is by picking away or picking a market after it breaks previous all-time highs, which is what we know as a growth cycle. Kind of example, Halifax, that's broken past all-time highs. It's going to be going through a growth cycle. Great place to invest. Whereas Greater Vancouver, we usually go through a growth cycle and then we have a time of filling out a selling range. During that point in time, for the average homeowner, you buy and you sell in a similar time frame, you really can't do wrong. That's kind of the old colloquial. If you buy and sell within 3 months, you didn't really win, you didn't really lose, but you're still time in the market, to your point, which is correct. Yeah. If you're a homeowner that has some equity and you bought maybe back in 2012 in the previous selling range with the average sale price of maybe right around $1 million, let's say, and prices have taken off to the 1.830, and these prices do come down to 1.225, 1.40, maybe at that point in time you start buying on the dips, and you can sell those investment properties on the peaks, right? So you buy low, sell high. And historically, when you buy low, sometimes those sell highs you don't necessarily have to do, because we're entering into a growth cycle. So not only will you have the total recapture of wealth of, to the tune of 33%, you will have over and above that as we go through our next growth cycle, which of course will happen in Greater Vancouver. It's just definitely not imminent, let's say.
Right. That's excuse me. That's a lot of good feedback. But so if I'm a buyer and I'm pre-approved for $1 million mortgage, it seems like we've got some optionality here. But
for sure,
what about from the perspective of a seller, right? So I think one of the messages that we got across last week is that, the market isn't apocalyptic, but it's something that is very unusual given
it's challenging.
Yeah, it's very challenging,
correct,
right?
Yeah.
So if I'm looking to sell my place, the message that I might have gotten from last week's podcast is, maybe I should sell my place quickly, or maybe I shouldn't, right? So if I'm taking a massive loss by selling my place right now, the disadvantages are obvious, but
right.
What are the advantages? Like, how can I turn that into an opportunity?
Okay, so there is a way to take advantage of real estate markets going down across the board, and it's kind of almost an arbitrage, if you will. So what we're going to do is sell our condo at a total loss and purchase a detached property at a total loss. So when we're talking total losses, we usually talk percentages, which is an interesting thing. So as we prescribe, the detached market will go down 23%, guaranteed, no questions asked, with a potential of 33%. Let's just deal with the 33% or the 23%, the safe average. At that price loss, that's an average sale price of $430,000 loss. Mm-hmm. With the condo market, even at top to bottom, it would be a 30% loss. You're only really realizing $225,000 loss. Mm-hmm. So from the sale price of $750, which was the peak in January of 2018, we're expecting a 30% loss to roughly $525,000 average sale price in the Greater Vancouver condo market in 2022. So while that's bad, it's only $225,000 loss, where the detached property has lost $430,000. Mm-hmm. Once you purchase the detached property, you can actually accrue back that $430,000 by just simply buying in at the lows.
Right.
Well, yes, a condo purchaser will recapture that additional 30%. It's only $225,000. It's not the 430 that you got by buying smart and picking the bottom in a different asset class, while all equity and all asset classes are dropping.
So if you've bought at the dip, one way that you can actually take advantage of that is buying something else at an even bigger dip. So
Absolutely.
So like just kind of logically, can I assume that buying at a dip and then buying at another market that's actually growing would probably be a horrible strategy, right? I don't want to take a loss now and then buying another market like Halifax that's growing very quickly. I kind of lose on both ends. Is that a fair assumption? Or?
I mean, that's really kind of investor mindset driven now. So when we deal with the condo ownership that kind of moves up, we're not really kind of dealing with that Halifax gentleman. Whereas where we might be seeing that kind of question is closer to 2021, to be quite honest with you, especially with the condo market. So downtown Vancouver has seen a ton of pre-sales. And I mean a ton. I'm sure you live downtown. You probably even had to walk past a few condo sale lineups over the past years just to get to work.
Yeah. That's true. Yeah.
And what's funny is everybody that lined up and got a condo, or maybe 6, or maybe 10, was foreseen as winning the lottery. I mean, they were going to be rich beyond their beliefs. On average, the deposit for that is roughly 15% to 20% in some different condo developments. In 2021, by that point in time, we're at the very least going to be down 20 to 25%. If you own 10 condos, are you going to complete on those at an additional 10% decrease? Probably not. So we're going to see a lot of those completed condos that were theoretically sold. They'll end up in lawsuits, and then if they're a foreign buyer, maybe good luck finding them. And so it will be very, very chaotic. So for those guys, and I mean, they can try to assign the condo that they've purchased, and that was a huge talking point maybe 2 years ago. Assignment sales, are they good, are they bad? Well, now they're just not a thing anymore, and that's really the market will. During a hot market, you can almost get away with anything by increasing sale prices. During a down market, you almost can't really give properties away because people are fearful of what's next. So when they should be fearful of what next during peaks, they're very greedy. Right. During opportunistic times, sometimes they're fearful, and that's what we kind of try to equalize and say, yes, there's chaos, but there's opportunity, right? Yeah. So 2021, 2022 in the condo market will be very chaotic. There will be lots of, like I say, properties that had sold will be back on the market selling again, which creates a market in and of itself. And then we get to the cannibalization factor of the condos. So when there's new condos available as a prospective buyer, you want the newest and the best. Plus, it has a 10-year warranty. What can go wrong? True. Very true. So those properties will start to sell. And the resale market will be next to nothing because you have no warranty. You know, it needs this fix up, and there's always going to be a complaint about a resale property unless it's really renoed to the max, and who's going to really do that in this kind of a downturn market?
Yep. Sorry to interrupt, Dane.
Sure.
So is the implication there that if I am looking to sell a resale, if I'm in a condo right now that's not a brand new condo, right? Am I better off selling now?
Yes. Yes, absolutely.
Yeah, I mean, a very straight yes. Yeah.
Absolutely straight yes. And quite truthfully, you could probably even buy your same condo back at a cheaper price, or a very similar condo in that same building.
Interesting.
2 years from now, because as we know, condo floor plans are very similar, floor to floor. So yes, I mean, if you live in an older condo and you want to sell in 2 or 3 years,
you're better off selling now.
You're better off selling now, or riding it out, and I mean, there's other opportunities and different ways around everything, but a direct yes is straight up the answer. Okay. So, and once again, going back to, while I am a realtor, I don't necessarily have the time to work with all of these potential clients that would like advice. We do work with you for the analytics base. Our reports are only $250. They'll cover either a generic area or a specific area to where you live. After that, we will meet with you, explain the report, explain what our analytical interpretation is, and offer the actionable intelligence that you could possibly take. If you choose to take that actionable intelligence, we'll set you up with a preferred realtor that understands our analytics, that has been in the market for a while, and even some realtors that are newer but are really gung-ho. They bought into the system. They understand how to effectively help a client rather than your guess is as good as mine as far as market price. So once again, we do work with a fantastic group of realtors that we can situate you with after we explain how the market's going to go for you. So getting back to the resale market versus the pre-sale come to properties that are just on the market because they're no longer pre-sales. So that market, the newer market, will take over. Well, what happens to the resale? Of course, you have to dip your price because your days on market and are through the roof, and you switch realtors, and the realtor says, well, we got a price reduce. That's the only option left. And they're right. I mean, truthfully, prices do move a market. And it will move a market to such a certain point that you recognize an older building that is such a decrease versus a newer building, and a savvy, smart agent, one of ours probably, will say, hey, tell you what, this property is X percentage lower than a new one, not to mention has an extra 500 square feet, not to mention has a brand new roof, brand new pipes, and a brand new elevator. Effectively a new building. Do you want to purchase it for this much lower? Well, heck yeah. I mean, now we can renovate it, we can do what we want to it a little bit, and we got a bigger palace with effectively new pipes, new roof, new everything. God bless it. And that will be a trend for a while. And then the new pre-sales will say, hey, what the heck happened to our lunch? We got a price reduce. Right. And that's the cannibalization factor of the condo market as we see it upcoming. So if you're in a market right now, I mean, do you have to lead the market? Yes. Do you have to be a differentiator to sell? Absolutely. We've had clients in the past that we've hooked up with realtors, and there's 30 condo units with a bedroom and den within a 2-block radius. Mm-hmm. That's a tough. How do you differentiate? Well, they're all priced between $409 and $420. Mm-hmm. Well, truthfully, you got to be below $400. You have to stand out. Mm-hmm. And so they ended up listing at $399, I believe the price was. And did they get $399? No. One of the properties listed at $426 ended up selling way below and took their medicine and sold at, I believe the price was around $385 or so. But who's the next one to sell? Is the next guy that's realistic? Is it the other 29 that are still priced above $409? Mm-hmm. Probably not. So they were the fortunate ones that next sold. Did they get $385? No, that guy's gone. But the next willing participant paid $383.
Right.
It's not bad.
Yeah.
And it's not great if the next one sells at $420, but it's not. And that's the eternal pipe dream that maybe someone's going to buy it. Why would they pay $420 for yours when the next listing, because now the new realization is these condo prices are around $380. Yeah. They're not $420 anymore where everybody just sat. And eventually they'll be at $360, $330, $320.
It's basically a race to the bottom.
It kind of is.
At least for the next few years.
Exactly. And I mean, we don't mean to be parabolic and scare the market, but this is a reality. This isn't us saying, hey, this is what the market should do. We're saying, unfortunately, this is the way the market mentality, psychology is thinking, and they're fearful. Mm-hmm. And that's the weird part. You get guys that say this is stable. And I say, you know what? That's fine and fair. That's what makes a bull and a bear, right? I mean, everyone can have their opinion, and then it's what is stable. Is stable over the next 2 months? Because then I'll agree with you that the market here might be stable. We're seeing a spring effect. I mean, so the properly priced listings will sell. You'll see higher sales than you saw in the horrible month of February, no doubt. But is that a good market? Well, it's better than February, but February was historic lows. Mm-hmm. And then when we go forward to next February, will it be even new historic lows, and March won't be as good as this March? And so we're trending lower. And that's why I say we're not stable. We're not in an area where we based out and we have a reason or a rationale to go higher. Our reason and rationale is to actually go lower to look for the rationale to go higher.
Right. And sorry, Dane, to move so quickly to the next topic, but
no problem.
We have time for one more bit of discussion. And as I promised, we're going to tackle another salacious headline. So again, it's incredible. It seems the only time the U.S. media talks about Vancouver is when it's something related to the real estate market, something that's really good or really bad. And I'd love to get your thoughts on this topic. But
sure.
What everyone's talking about is these giant mansions, whether they're by UBC or whether they're in West Vancouver, and they're basically being rented by destitute college kids, right? So they're paying
destitute for Vancouver.
Right, yeah, exactly.
Kids that can afford to go to college in Greater Vancouver that are destitute. I hear you.
Right. The kids who are driving BMWs.
Exactly.
You go to the UBC parking lot and it's all Mercedes and BMWs, right? So,
poor kids.
But anyways, I mean, on a serious note, these kids are paying pennies on the dollar for really what they should be paying in these giant mansions. So.
Right.
What's going on here? Like presumably these mansions are owned by foreign buyers. There's something related to the empty homes tax. Like, give us a breakdown of what's happening and why are the college kids and why specifically college kids? Right?
Fair. So, once again, I mean, you're a good friend of mine. That's why you ask such excellent questions.
Yeah. I do what I can. Yeah.
So, why are college kids renting out luxury properties in Greater Vancouver in some of the more fine areas across this beautiful area? It's because they're available for the first time to anybody, really, because of the empty homes tax. You do get taxed at a certain percentage, and if it's rented out, it's no longer taxable, right?
So a quick question on that. Does that apply only to foreign buyers, or can you be a domestic buyer?
Exactly. Yeah, if you're an investor, let's say that you own 6 properties, and forever you and your family lived in one, and then you rented out one or you let your father, let's say, live in one, and the other 4 just literally sat as dilapidated homes, but you knew equity was going up long term, and those you're going to be taxed for right now. Okay. If you're an investor and you don't live in your property anymore, even if it's you've rented out the 10th and you're the 11th one you own in, and you don't stay here for a specific amount of time, you're getting dinged on the empty homes tax. You literally have to be a Canadian citizen, contributing to the economy, buying gas, buying groceries, buying everything local-ish that we bring in from Mexico or wherever, contributing to the economy, right? So that's that thought on that. These luxury homes are not cheap. I mean, they're not going for $3,000, right? But so a regular necessarily family can't really afford that. They'll still be renting a $3,000 townhouse, something to that effect, where a $6,000 house might be really outside their range. However, you get an individual that lives in Vancouver, he can't afford that, period. He's got to rent somewhere to work because of the stress test. He's has been affected by that, and he literally can't afford, even though this was supposed to aid buyers, which is the misnomer once again. So he's looking for a 1-bedroom. He's looking for a place where he can lay his head down, pay his rent, go to work, because this is the gambit in Vancouver. I mean, it's a tough game some days. So those 1-bedrooms, when they're available, they're still very desirable, because as much as I love you, I don't know if I want to live with a stranger. I don't want to, you know what I mean? So the idea of having cheaper rent isn't that great of an idea when I actually think about living with somebody. Right. So I want a 1-bedroom. College kids, they don't have that expectation of living on their own and getting by here in Greater Vancouver. They actually have the expectations of making good buddies and living with strangers that will become their good buddies, lifelong friends, as you and I have. Yeah. So the idea isn't foreign to them, where it would be completely foreign to you or I, given a few years ago when we were really making our mark or trying to leave our mark on society. Mm-hmm. Living with somebody else just wasn't an option. We were focused. Mm-hmm. And that's still prevalent out there. And so the 1-bedrooms are gone. Mm-hmm. The luxury homes, do I want to pay this enormous tax on my empty property? Or maybe do I want to rent it out to 4 college kids that, they might have a few parties, but hopefully they still respect my house enough that they're not going to trash it. And if they do, they're paying me fair market rent so that I can get it, whereas the affluent family still maybe isn't renting. Because here's once again the misnomer with the stress test. 20% taken away from your buying power doesn't hurt the affluent people, doesn't hurt the rich people. I mean, if I got $6 million and you're saying, you know what, put an extra 20% down, here it is. Mm-hmm. If I've scraped together $100,000, it's just a ton of money to put a down payment. Now you're saying I can't buy what I used to be able to afford until I show up with an extra $20,000. Mm-hmm. It's going to take time to show up. So that's kind of that misnomer where we're going to make the market more affordable, and we're going to help those that need help. That never happened here, and so those guys are stuck renting. And hopefully, when these markets go down to the full 30% drop in the condo market, we have the great following that will help them buy, because maybe at that point in time the amortization rate has changed, which will be a great help. We can't do anything about the stress test. That's a national program, so that is what it is. And once again, going back to our previous conversation, it has a rhyme and a reason. It's just going to be very difficult to overcome this rhyme and reason. If you can qualify for a property under this new stress test, even with a 20% decrease in market value, which is historically roughly the average, you will still be able to make payments.
Right.
That's their good logic. However, you can't buy, even though properties have started to come down 10, 15, 40% in some areas, because it's untenable as it sits right now.
Yeah, perfect. And with that, we are officially out of time. Man, again, another fascinating conversation, Dane. This is a lot of fun. I'm very much looking forward to the next one, episode number 3.
You got it, buddy.
Yeah. Again, eitelinsights.com. Check us out. Twitter, Eitel Insights. And we'll have a lot of new fun topics to talk about in episode 3.
One other thing I will just put out there, keep sending the emails in. You can visit us directly. I think you said it right at eitelinsights.com. We are on LinkedIn as well if you want to go that route. We post a number of our articles and public publications out there. One other thing, you did mention Financial Times. We were quoted in that, I believe it was 2 or 3 weeks ago, maybe 4 weeks, 3 weeks ago. All of our publications do show up eventually on Eitel Insights under market updates, I believe is the tag. And you can check there. I mean, check our history. We've been published since 2017. We've been correct so far. We hope to, we strive to continue to be correct and offer our clients actionable intelligence.
All right, perfect. Looking forward to the next one. Thanks everyone for tuning in. Take care.
Thanks, guys.